Most people don't struggle with money because they earn less. They struggle because they don't understand how money actually works.
From investing in retirement plans to loans, mortgages, credit scores, and everyday financial decisions, welcome to Investing SQ. We simplify finance so you can make smarter, confident decisions in your daily life. Because when you understand money, you control it. Let's get started.
All right, let's talk about one of the biggest financial decisions you'll ever make, buying a car. Now, we're all trained to see it as this huge expense, right? But what if I told you that's completely wrong? What if that single decision is actually one of the most powerful wealth-building opportunities you have? Seriously, the numbers we're about to go through are absolutely staggering.
Okay, just look at this number, $1,580,000. Let that sink in for a second. This isn't some crazy lottery jackpot or a complex investment scheme nobody can understand. This is a real, achievable number. And believe it or not, it's directly connected to the car you're driving right now.
You know that payment that vanishes from your bank account every single month? It just feels like a cost of doing business, a part of life. But what if we're looking at it all wrong? What if it's not a drain on your finances at all? What if that car payment is actually the key that unlocks that $1.58 million? And no, that's not an exaggeration. In this explainer, I'm going to walk you through, step by step, how to turn what feels like a financial ball and chain into a machine that can build you a fortune. Okay, so let's get into it. First, we need to understand the problem, and it's a big one. It's a financial trap that's become so normal in our culture, we don't even recognize it as a trap anymore. We just think, well, that's just how it is.
The scale of this new normal is just wow. Look at these numbers. We're talking about $1.8 trillion in total auto debt. That's more than all student loan debt combined. It affects 100 million Americans. And that average new car payment, it's now hovering around $800 a month. This isn't just a minor bill anymore, it's become the defining debt for millions of people.
So you might be asking, how in the world did we get here? Well, the goalposts have moved, big time. You know, back in the 60s, a car loan was usually done in 3 years. Today, the average is almost 6 years long. And get this, 1 out of every 5 new loans is for 7 years or even longer. The reason is simple. It makes ridiculously expensive cars seem affordable by stretching the payments out, which just keeps people trapped in debt for longer and longer. So let's talk about the game plan. How do we get out of this mess? This next part is your tactical guide for the moment you decide to buy a car, because taking back control starts right here. Okay, this slide is critical. You might want to burn this into your memory. These are the 5 questions a dealer will use to immediately take control of the entire negotiation. First, what's your monthly budget? Boom, now they're selling you a payment, not a car. Second, do you have a trade-in? This lets them juggle numbers and hide costs. Third, paying cash or financing? This just tells them how to structure the deal for their max profit. Fourth, what's the absolute max you'll pay? Never, ever give them your top number. And the classic closer, if I can get you to X dollars a month, are you buying today? That's just a pressure tactic. Answering any of these is like handing them your wallet. And this shows you exactly what's happening. It's a game with 2 totally different goals. The dealer wants to make things as complicated as possible. Focus on the monthly payment, stretch the loan, use the trade-in to confuse you. Your goal has to be the exact opposite. Pure, radical simplicity. You need to fixate on one single number. And this is it. This is your secret weapon. Your job is to politely deflect every single one of their questions and just keep coming back to this one. I appreciate that, but what is the total out-the-door price? This question cuts through all the noise, all the confusion, and puts you right back in the driver's seat of the negotiation. All right, so what about the 100 million people who are already in a car loan? Let's talk about the smartest way to break the cycle. And it starts with another huge mental shift. We're programmed to think paying off debt is just an expense, something we have to do. It's not. It is an investment. When you pay extra on a car loan with, say, an 8% interest rate, you are earning a guaranteed, risk-free, tax-free 8% return on your money. You can't find a guaranteed return like that anywhere else. The stock market isn't guaranteed. This is.
So the big question is, when do you pay off debt versus when do you invest? Here's a super simple framework. First, is your emergency fund solid? You've got to have that safety net. Second, is your debt expensive? And really, anything over 6 or 7% is a fantastic guaranteed return. If the answer to those is yes, then step 3 is simple. you attack that high-interest debt with every spare dollar you have.
And this, right here, is where the magic really happens. This is the most exciting part. It's not about negotiating a good deal or even paying off the debt. It's about what you do the month after you make that final car payment. This is where you start building real freedom. This is the single most important move you can make. That money you are sending to the bank every month, it is not new breathing room, it's not fun money, it is now your wealth-building capital. The very same day that payment used to come out, you set up an automatic transfer for the exact same amount to go straight into an investment account. You don't even give yourself a chance to miss it. So what happens when you do that? Well, this is the awesome power of compound growth. Let's say that old car payment was around $700. In just 10 years, it grows to over $140,000. In 20 years, you're looking at over $500,000. And in 30 years, there it is, $1.58 million, all from an old car payment. And get this, of that final amount, over $1.3 million of it is just market growth. I want to repeat something I read because it's so perfect. You didn't earn that $1.33 million. You just didn't interrupt it. Think about that. You didn't interrupt the compounding machine by going out and getting another loan. And you know what the best part is? The investment strategy itself is ridiculously simple. You don't need to be some Wall Street guru. Step 1, automate it. Step 2, put it in a simple, low-cost index fund that just tracks the broad market, like an S&P 500 fund. And step 3, be patient. The key isn't trying to be clever. It's about being incredibly consistent. So, let's bring this all home. What does all this really mean for you? It's about way more than just having a big number in a bank account. It's about a fundamental shift in your identity and what you consider to be true wealth. This quote just nails it. Society tells us we have to look wealthy, buy the flashy car, get the big payment, signal to everyone that you've made it. But real wealth, true wealth, is quiet, it's invisible. It's being built in the background, in a brokerage account, by someone who's driving a reliable, paid-off car because they understand the huge difference between looking rich and actually being free.
So I'm going to leave you with this one question to think about. What does freedom really look like to you? Is it the shiny object sitting in your driveway that locks you into a payment month after month? Or is it the financial strength that nobody else can see, the options it gives you to change your life, to handle a crisis, to live on your own terms? The choice really does start with your very next car decision.
At the end of the day, it's not about how much you earn, it's about how well you manage it. If this video helped you understand money a little better, then you're already ahead of most people. Make sure to like, subscribe, and stay connected with Investing SQ, where we simplify finance for your everyday decisions. Before you go, don't forget to comment from which part of the world you are watching, and don't miss our next video. It might just save you thousands.